Here's what it looks like to become an income partner at Kirkland Ellis in less than 3 minutes. Let's get into it. First, let's start with compensation. Being one of the largest law firms in the world, Kirkland pays the cravat scale. As an income partner, you can expect to make the same amount of money as a 7th-year associate at other big law firms. For 2025, that's a salary of $420,000 paid to you as a partner draw twice monthly. Kirkland also pays market for bonuses, although that depends on your billable hours. For 2025, the market bonus is $115,000 paid to you at the end of December. Next, let's discuss employee benefits. At most law firms, new partners are on the hook for the full cost of their benefits. This can be a huge jump in cost, especially for those who insure their entire families. As a first-year income partner, Kirkland continues to subsidize some of your benefits, such as health insurance. However, certain benefits, such as dependent care and medical flexible spending accounts, are no longer available to you. Also, you will now be required to purchase a $2 million term life insurance policy through the firm's group life plan. Staying on the benefits topic, new income partners who meet the eligibility requirements are now required to contribute a portion of their year-end bonus toward the employer portion of their 401k. As a first-year partner, the mandatory contribution is 25% of the IRS limit, which is $46,500 for 2025. So you can expect around $12,000 to be deducted from your 2025 bonus. The mandatory contribution goes up to 50% of the IRS limit in your second year and 100% of the limit in year 3 and beyond. Note that this is in addition to your voluntary 401k contributions, so you could technically reduce those if you don't want to feel the cash flow crunch. Lastly, let's discuss taxes. As a partner in the eyes of the IRS, you're technically considered an owner of the firm, even if you don't share into the profits. Because of that, you must now pay the self-employment tax, which is the equivalent of the Medicare and Social Security tax for self-employed individuals. You're now also responsible for a portion of the firm's state tax liability, even if you live in a state that doesn't levy a state income tax. But the good news is that Kirkland hands out a special stipend to offset the increased tax burden. But that's only for first-year income partners. All right, guys, that should give you a pretty good idea of what to expect as a first-year income partner at Kirkland & Ellis. If you want more insight into the world of big law and personal finance, follow me.